Hello, everybody, and welcome to our virtual tax school webinar series. My name is Amar Medic, and I am the product marketing manager for TaxWise. In today's webinar, we'll be covering business returns basics. We'll go over the ins and outs of the 1120S business return and walk you through the process of filing a partnership return using TaxWise Online. Keep in mind that we do try to host one webinar per month, so if you find today's session to be informative, please be sure to join us in the future as well. Throughout the webinar, you'll be able to ask questions to the team and get those answered live at the end. And with that said, I would like to introduce our main speaker for today, Mr. Ryan Hubbs. He is a solutions architect here at Wolters Kluwer with years of experience working in the tax industry. He'll be sharing his insights on how to prepare business returns. So with that, let's get started. Ryan, please take it away.
Okay, thank you so much for the kind introduction. We will be going over the 1120S in particular today. Last month we did the 1065. If you did join last month's session, I do have some good news. Honestly, they're not too different when it comes to the preparation and completion of both those tax returns. The process is going to be almost identical. However, there probably are some more macro level items that we need to touch upon between some of the differences between the 1065 and the 1120S. Now, really, my goal today is I'm going to break down this presentation in a couple of different parts. We're going to start off with some PowerPoint slides, just explaining the return, explaining what we're looking for from the clients, what we need to prepare the return. But then we will jump into an actual tax return, and we'll talk about doing the data input. Specifically, we're going to talk about the K1s as well, which is going to be probably the most important thing that's going to generate off of this tax return. And then at the end, if there is time, I will do my best to go through the questions. Sometimes there are a lot of questions and I can't get through all of them, but I will do my best to get through as many as I can. So to go ahead and start this and take it away, I'm going to start off by going through our slides. And I do like to give just a brief introduction of myself. Also, more importantly, I think put a face to the voice, right? And I do have my background in accounting. It's what I went to college for. It's what my degree is in. And after I graduated, which I guess was about 14 years ago now, I worked for two CPA firms up in Washington, D.C. When you live in Washington, D.C., working for a CPA firm, you do a little bit of everything. I did some nonprofit work with like 990 sorts of companies. I did some compliance testing with the government, but most of what I was doing was taxes, taxes, taxes. I have been through quite a few busy seasons. I definitely can relate to the grind and the struggle of having so much work to do in a very condensed amount of time. It's really going to be my job today to not only show you how to get through the 1120S quickly, but also accurately. My current role here at Wolters Kluwer, I am a solution architect. It is an extremely fancy title. However, really what I am is a product specialist. I kind of am the gap between accounting knowledge and how to use our tax software. As a result of that, I do host presentations like the one that we are on today. I typically host one of these once a month, kind of through April to December, and then we go on hiatus during the busy season. So be on the lookout for more of these presentations. But let's go ahead and get into this and talk about what our objectives are. Now, first and foremost, we need to talk about what an 1120S is, what that S is really signifying to us. While the 1120 and the 1120S may sound pretty similar, they are very different with how the IRS has structured and set them up. By and large, 1120s are their own separate entity that will pay taxes at that given time, where an 1120S is very similar to a 1065, where the return itself is really just an informational return, where we're just going to go ahead and calculate the data. We'll go ahead and file it so the IRS has it, but where all the taxes are being paid and where the financial information is ultimately flowing through is going to be to the 1040. If you have a good tax software, it should be creating the K1s, and then you will be inputting the K1s on the 1040, and that's really where the taxes are going to occur. We'll also talk about the due dates and penalties. These due dates and penalties are going to be pretty much identical to the 1065, but we'll at least have a slide to let you know when these returns need to be filed, and if you can't get to them in time, when the extension deadline is. And then we'll talk about the penalties. As a general rule, the larger the company, the more shareholders there are, the penalties can really snowball and get to be really exorbitant. So making sure you hit these deadlines is going to be very important. We will then go and talk about the trial balance. There are many ways to prepare an 1120S. Hopefully you will have a trial balance. And if you don't have a trial balance, hopefully you will have financial statements. However, I do recognize that sometimes you may not have these items. You may just have some notes scribbled on a piece of paper you're trying to decipher. I totally get that. But for today, we're going to be using a trial balance, as if you can train your customers to either give you a trial balance or, better yet, pay you to make a trial balance for them, it's really going to make the data input process very easy. We will then look at the K1. The K1 is probably the most important thing that's going to be generated when completing one of these returns. This is really where the data flows from one return to another. It's how we're going to report everything to the IRS. TaxWise is going to go and create the K1 for us. If we are working on the individual 1040 as well, there are some importing features that will also push a lot of that data. But I do recognize that sometimes we just get a K1 slip from our customers, and that's okay too. Really doesn't matter how we're getting the K1. It just matters that the K1 is accurate. And if we're preparing the 1120S, we are ultimately liable and on the hook to make sure that these are being prepared accurately. And then lastly, this is more of like an all-encompassing point. We will be using our TaxWise software in order to go through the return and really show the nuts and bolts of how we're going to go ahead and prepare this. So with all that being said, let's go ahead and work through our slides, just kind of explaining TaxWise, and then more importantly, explaining the return. Now, in the past, if you've used TaxWise, you may be thinking, I didn't know you could do a business return within TaxWise Online. This has recently changed. In the past, it was 1040 only software. However, now moving forward, you can do the 1065 and the 1120S as well. So we'll be using TaxWise Online to go ahead and complete an 1120S today. You can also see there are some new features that are on this slide here as well that will be coming out in November of 2025. We typically release the software in November. I don't think we have the exact date yet, but roughly November, late October, we have the next year's version of the software. Now, the common types of business entities are going to be corporations, subchapter S corporations, limited liability companies, and partnerships. And for purposes of this presentation, it's really those middle two items that are going to be the most important. It's going to be the subchapter S. It's going to be the LLC, the limited liability companies. The reason that these are going to be most important for today's presentation is both of these can elect to take the subchapter S tax election. I understand that that is kind of a mouthful, a wordful, but ultimately what that's going to mean is that the subchapter S election means that it's going to be treated as a pass-through entity. We are going to report the income on one tax return. The information as far as the income and expenses are going to pass through to the 1040. This would also be similar for the partnership, but we're not looking at partnerships today. Corporations, just your normal 1120, these are taxed completely separately. It's really not even like an apples to oranges comparison. It is a completely separate ball game for the 1120. That's going to be a little bit out of scope for today's presentation. And really primarily, we're going to be focusing on the S Corp. But just keep in mind that most of this information is going to also be applicable to any of the LLC tax returns that you are preparing. Now, moving forward to the next slide, let's go ahead and talk about what an S Corp is. Well, earlier, I said an S Corp is a type of corporation that chooses to be taxed under subchapter S of the IRS regulations. I really think the only thing that you need to know about the subchapter S is you probably don't need to know each and every IRS codification of what that means. I think the most important thing you need to know is just the financial information passes through from one return and is ultimately taxed at the 1040. There really, once you finish an 1120S tax return, there are no taxes that are being paid at that moment. Now, the S Corp is going to report its income and expenses on the Form 1120S. We're going to dive into this here in just a minute. I will say that when I first started doing tax returns, I started off, and I would say the first few hundred returns I did were all 1040s. I got very used to and very accustomed to 1040s. And when I had to switch over and start doing business returns, I was a little apprehensive about it. I figured it was going to be much more difficult. It was going to be very confusing. These are, in some instances, fairly large businesses that I'm doing tax returns for. And while that may have held true for the first few returns that I did, ultimately the learning curve was quite a bit less than a 1040. And once you really get up and running, It's a rather straightforward data input process. If you're filling out a 1040, you typically have a bunch of different forms, a bunch of different worksheets that you're constantly filling out. For something like an 1120S or a partnership 1065, these are actually going to be pretty straightforward once you get the hang of it. TaxWise in particular uses a trial-based input. So really, if you have a trial balance, you just look at the trial balance and do the input. I'll show you what all that looks like, though. I've said this many times. There's a reason I've said this many times. There may be a polling question on this coming up here in just a few slides. But once again, it's a pass-through entity. There are no taxes on the 1120S itself. The income flows through to the 1040. And the K1. The K1 is really the most important section of all of this. The K1 has to be right. If you have an inaccurate K1, it really means two things for you, and it's a problem that's going to compound upon itself. If your K1 is inaccurate, it means your 1120S tax return was not done correctly. And as a result of that, once you go and start typing in or flowing the data into the 1040, the K1 is wrong, your 1040 is also wrong. So getting the K1 right is the most important bit of all of this. If you mess up the K1 and something does not check out the way that it should, you will have two tax returns at a minimum that are incorrect. But that's really the minimum number of returns. If we have an S Corp and there are 10 different shareholders and we do all 10 of those shareholders 1040, each one of those tax returns is going to be wrong if the K1s are wrong. So you really have to spend the most time making sure that these K1s are generating accurately. Now, as far as the financial information on a K1, box 1, ordinary business income, box 2, net rental real estate, for example, the software is going to go and figure out what amount should be allocated to each partner. What's really you have to go and make sure is correct. So you have to make sure that their ownership percentages are accurate. It has to be to the decimal point accurate. If they are not accurate or you're rounding, ultimately these are going to be wrong. This really isn't something like W-2 income where it's okay to round up, round down. They really have to get the exact number for K1 purposes. Otherwise, everything is going to be either slightly or completely off. Now, for the deadlines, the 1120S return is going to be due March 15th. So this is going to be a full month earlier than our 1040s. And if we need to extend it, the deadline is going to be bumped up to September 15th. Now, I am not a huge fan of this due date for 1120S returns. Reason being is many times we are not receiving the K1 in time. We have to go and generate the K1, and then it puts such a crunch where we might not get the K1 for the 1040. I feel like a month gap is not, in my opinion, sufficient. However, the IRS doesn't really take into account what my personal opinion is on the matter. So we got to stick with the due dates that they give us. The due date's going to be March 15th, and if extended, it's going to go to September 15th. And like I said, the penalties really compound the larger the corporation, the more shareholders that they're going to be. And if we go on to the next slide here, there are going to be some requirements that we have to follow if a company is electing to be an S corporation. Now, if you're just doing the tax return, this is really something for your customers to worry about more so than you. But I know a lot of people that are on this call, you're kind of the one-stop shop for your clients, right? You're doing the bookkeeping, you're doing the quarterly tax reports, you're doing the 1120S tax return. And as a result, as you get more ingrained with your customers and you really become their go-to for everything financial or everything taxation, a conversation that you're going to want to think about having is for a lot of people that are maybe currently using a Schedule C, maybe they're a sole proprietor or their business is growing. You're going to want to know these certain requirements because by and large, it's generally speaking, more beneficial to elect as an S Corp as opposed to being a sole proprietor or like a Schedule C sort of business. And there's a couple of reasons for that. Usually the pass-through income can get the taxable liability down, but really even more importantly than that, you have to think about liability from a company standpoint. Like if someone is just a sole proprietor and their company goes bankrupt, they are personally liable for their debts that they have incurred. So if they have vendors, they have other people that they need to pay out, they may have to sell assets. They might have to pull that out of their savings accounts or 401ks, to make sure everyone's paid out. One of the big benefits of being an S corporation or partnership is your individual money or your individual assets, financial, items that you own are completely separate from your business. So if you run a business and it goes bankrupt and you end up incurring a large amount of debt, they are two separate entities. You have your own personal finances, you have your business finances. They cannot take from your personal finances to go ahead and pay off any S Corp debts. This is also very similar for the partnership. It is generally, in my opinion, the biggest reason to elect as an S Corp is to minimize your liability. If something happens with your business, let's keep the losses specifically to the business, and let's do what we can to go ahead and protect you personally from any financial debts that may occur from the running of this business. Now, as a result of this, there are a few requirements that we need to know. And the first one on the screen here, you can have no more than 100 shareholders. Now, I actually believe this is a pretty generous number. And for purposes of typical person that would attend this presentation, I think it's very unlikely that you're going to run into an S Corp with more than 100 shareholders, but that is the absolute maximum that they are allowed to have. Now, when it comes to who these shareholders are, I think it's very easy to just think of people or individuals, right? I could be a shareholder, you could be a shareholder, but that is not necessarily the case. Many businesses own a separate business that is a subsidiary of that business. And with the S Corps, you somewhat can do that. There's going to be more strict regulation as to what can be a shareholder and what can't be. But the most common types of shareholders are going to be the individuals, trust, and estates. Those would be the big owners that you're going to run into time and time again as to who can own an S Corp. Some of the items are some of the entities that cannot be shareholders are other corporations. This is a big one. If they were just a normal corporation, not an 1120S, one corporation can own a second corporation. But once it becomes an S Corp, everything changes. You cannot have an S Corp owning another S Corp. You cannot have a corporation owning an S Corp. This is primarily meant for smaller size businesses. Now, 100 people to me is a large business, but for IRS purposes, and really when you think of huge firms like Geico, Samsung, etc., I mean, those have publicly traded companies, right? They have so many different shareholders. With an S Corp, it's just going to be 100. Also, partnerships cannot own an S Corp, and resident aliens can also not elect for S Corp filing with the IRS. Now, this last point is a little bit more niche. And this definitely not an all-inclusive list of who can and can't be an S Corp. But there are some restrictions the IRS has placed on this. Certain financial institutions, insurance companies, even have domestic international sales corporations are barred from becoming an S Corp. Now, this is not meant to be the entire list of everything that can and can't be an S Corp, obviously. But if you're working with your client as like a financial planner, and you're maybe thinking about electing under S corporation status, I include this bullet point just to kind of reiterate and highlight to you, like, make sure they can do it. They're in a very specific business that you don't run into typically. Just give it a quick double check. Just make sure that you have all your ducks in a row. Now, last slide here, and then we're going to go ahead and open this up to a polling question, is just talking about the penalties. And the penalties are by and large pretty much identical to the 1065, where if the return is late, there's going to be a $220 charge for each shareholder that was a shareholder at any time. So if you have someone that maybe they own the business, then they sold their shares to someone else, even if they're not a shareholder at the end of the year, this $220 fine is still going to be applicable to them. And if you have a larger S Corp, 20, 40, 60 people, each one of them is going to have to pay this $220 fine, or it's going to have to be cumulative and come out of the business income. And this is not just like a one-time sort of deal. Each month this is late, you're going to incur this fee month by month by month. So you take the total number of shareholders throughout the year, multiply it by $220, multiply it again by each month it's late, and you can really see the penalties skyrocket. So when it comes to like S Corps, when it comes to partnerships, typically want to go ahead and highlight that this should probably be the focus of your company, as they're going to be due a full month before the 1040 needs to be done. So with all that being said, after this, we're going to look at the trial balance and then get into a tax return. But before we do that, I do input a few polling questions throughout this. And this is going to bring us to our first polling question. And I've given the answer a few times throughout this presentation, so I'm hoping everybody gets this right. But it's a pretty basic question. What is an S corporation? And I have option A, corporation that files an 1120S and pays their share of taxes with the business tax return, or option B, a corporation that files Form 1120S, produces a Schedule K1, which reports each shareholder's ownership share of the S Corp's income and expenses. And ultimately, that will flow through into the 1040. So I'm going to take 1 second here to allow everybody to go and answer this polling question. I'm going to take a quick sip of water, and then we'll go explain which answer is correct. Okay, and it looks like we have a majority of attendees that have answered. There we go, up to 64%. So going to give it just a couple more seconds. Do want to take a moment here while we're doing this. Let everyone know we are on a new platform for this presentation today. This is on On24. We've used GoToWebinar in the past. And this is the first time me and my team have used this, this hosting service before. So far, I think everything is running smoothly. But if we kind of have any moments where we pause, we need to figure out the screen share. This is a little bit of a learning process for us today as well. So I just want to let you know that as I start to share my screen and go into the software, I am anticipating everything should run smoothly. However, this is my first time doing a presentation on this platform. So if there's any hiccups, just want to let you all know why. Okay, so with all that being said, looks like we have pretty much everyone has gone and answered the question, and 100%, I love to see that everyone has gotten this correctly. I know I've probably said it 2 or 3 too many times throughout this presentation, but it's the whole kit and caboodle when it comes to the S Corp. You know, the business is not paying the taxes. The shareholders pay the taxes for the S Corp based off how much they own of the business. And if you have that down, the whole flow, the whole process should make sense. So moving forward here, the next item to talk about before we jump into a tax return is the trial balance. Now, we could get financial information for a business in many different ways. This, in my opinion, is the best information we can get for a business, where it clearly states all the assets, all the liabilities, all the income, all the expenses, in a very neat, easy to read section that we can then use to key the information into the tax return. And you know, any accounting software should make a trial balance. You use QuickBooks, you use Xero, any of the other tax softwares. If you're inputting the data throughout the year, they will typically make the financial statements and it'll typically make a trial balance for you. And this is what is going to make your life easiest. However, life is not always easy. Sometimes we're not going to get a trial balance. I'd say the second best piece of information is going to be financial statements. So you can usually look at the profit and loss and kind of work through the income and expense sections of the tax return. And, you know, sometimes I do recognize our clients do not have the best financial records. They are sometimes just jotting it down on a piece of paper, right? It's scribbled notes. We have to kind of squint, decipher what it is. That's going to happen too. I do like to take a moment and really talk about what our due diligence is here. We are not auditors. It's not incumbent upon us to go through each one of these accounts or each piece of information and make sure it's 100% accurate. That's a little bit outside of our scope as someone who is preparing the tax return. However, if we see anything that is glaringly wrong and we know it's wrong, we should be reaching out to the client. We should be talking about to them, you know, what's going on here, getting some additional information, maybe helping them get it right. But do not feel like you're an auditor. I try to stress that in each one of these presentations that I do, is that we do not need to go through and verify that everything in a financial statement or everything in a trial balance links back to the actual account if we were just doing the tax return, right? But if we see anything glaring, it's always best practice to kind of work with our customers. So with all that being said, if this is your first time seeing a trial balance, it can look a bit more overwhelming than it actually is. Trial balance really, to figure out what each item is, you are going to be focusing on the account number. Typically, items that start with the number 1 are going to be assets. This will be input into the 1120S balance sheet. Items that have the number 2, these are going to be liabilities, accounts payable, mortgages, things of this nature. Once we get into the threes, these are usually going to be the capital accounts, by and large stating the ownership percentage between different shareholders or different partners. Once we get into the fours, this will be income. And then usually the fives and sixes are going to be the expenses started throughout the year. Now, sometimes I have this trial balance listed in the 10,000 and 10,200. A lot of times you'll see it just listed out in the hundreds. We have 100, 102, 103. Really doesn't matter. Really, it's the first digit of an account in the trial balance that is truly going to tell us, okay, what type of asset is this, liability, etc. Debits and credits, probably not overly important to know if something should be a debit or a credit if you're just receiving the trial balance. If you're creating it, you have to know. But if you're just filling out the tax return, it's really not going to matter too much if it's a debit or a credit. However, there is one thing that you should always check if you are getting a trial balance, and that is right down at the bottom. Your debits have to be identical to the penny to your credits. If they are not identical to the penny, something is wrong. And something needs to be fixed, whether that's a journal entry, whether we need to go back and make sure everything was keyed in correctly. They should be identical to the penny. If there's even a 1 cent error, it is technically off. Now, to prepare a tax return within TaxWise, we are going to use the trial balance, and we'll look at those worksheets in just a second. But where I want to go now to start is I actually want to jump out of the PowerPoint, and I want to go and share my screen. And like I said, this is a new this is a new platform, so I am just trying to make sure I click all of this correctly. I believe I have, and we're going to be going into TaxWise Online, which is going to be a browser-based program. I did log into this before the presentation. However, it looks like it timed me out since I haven't been in it in a while. Since this is on the cloud, we just go through our web browser. I'm using Chrome today, but you could use Edge, Firefox, Brave, really any of them. And we're going to log in. And once we go and log in, we're going to go and click on our tax returns. And I went ahead and just kind of created a very basic S-Corp before today's presentation, which we are going to go and open up. Now, when we open up the S-Corp return, it's just going to go ahead and open up to page 1 of the 1120S. And there are really three sections that are going to be the most important bits of preparing this tax return. And it is loaded up to the first important section. This is the actual form itself. Now, as I continue to scroll down past the basic basic name, address, non-financial information, it is eventually going to go into an income section. We scroll down a bit further, it's going to go down into deductions, and we're going to talk about how to prepare all this. And then it'll go into taxes and payments, e-filing, etc. As we go to page 2, it'll ask about the accounting method. Now, there is no right answer for the accounting method. I would say in today's age, accrual method has definitely become the most popular, just meaning that as income is made or as a liability is incurred, we're going to treat it as an expense on the tax return. But there are still primarily some smaller companies that still use cash. They're using the cash basis of accounting. Really all that means is you just look at when cash changes hands. To give you an example, if I was using the cash method of accounting and I pay a painter to come and paint a room, let's say in my office, if the painter goes and paints the room, but I have not paid him on the spot, I have not incurred the expense with cash accounting. Accrual is completely separate. As soon as they paint that room and I owe them money, whether I have paid them or not, we're going to have the expense on the tax return. That's the biggest difference between cash and accrual. Now, most firms I work with use accrual. If they use cash, I try to get them to use accrual as it makes things a little bit easier on my end. But ultimately, no right answer between the two of these. Now, once we get to the second page, really going to go through a checklist that's really going to vary based off of the individual specifics of each particular business. And as we click yes to some of these, there may be additional sections that we need to fill out. You can see here for section 4, if they own 20% or more, or any of these other options, then they have to go and fill this out down below. If it's a no, you can just go ahead and skip over it. So just make sure you're going through the instructions with the fine-tooth comb. Just make sure you're not filling out sections you don't need to do. Now, when it comes to the preparation, you will typically set up these lists, these checklists once, and then it should roll forward from one year to the next. So, you might want to always come here to just double check, make sure nothing's changed. But by and large, once you filled this out once, it does roll forward. Other important section of the 1120S tax return is the balance sheet. Here it is, the balance sheet. Now, this is something that you don't necessarily have to do for like a Schedule C business, for example. The main thing with the balance sheet is you're going to have assets at the top. It's going to start off with the beginning of the year. Now, these should roll forward from the prior year if you're using the same tax software. And then you'll have your end of year. This is really what's going to change as you go and you start plugging and chugging and doing the data input into the return. Now, the main thing you need to know about the balance sheet is all of the assets need to equal the below section with the liabilities and the shareholder equity. If you have gone and if you're using a trial balance, this should happen. This should happen. Sometimes, though, frustratingly, you make a mistake somewhere and it doesn't balance. Before you submit a return, this section here needs to equal your assets down below. You can see I've not input any assets into this return yet. So my balance sheet is completely out of balance. If I were to send this off to the IRS, it's going to get rejected for sure. But when it comes to actually like populating this worksheet here or going back to page 1 and populating the income and the expenses, TaxWise uses a trial balance worksheet, which is why I've talked about the trial balance a few times throughout this presentation, as this is really the main worksheet you're going to use. And we're going to go ahead and click on it. I already have a trial balance worksheet in here. And this is going to vary pretty significantly from like a individual 1040 tax return or a trust, for example. Those sorts of returns, you kind of add in worksheets, you add in forms as needed, and then you key in the data each and every time into the various forms, into the various worksheets, completely separate with a business return, completely different with a business return. As you go through and you need to prepare this return, when it comes to the financial data, the overwhelming majority, and in many instances, all of the financial data is going to go into your trial balance worksheet. Now, earlier when we were looking at a trial balance, I talked about the numbering. Like number 1 is an at. It starts with the first digit of the chart, or of the, excuse me. The first digit of the account is a 1, it's an asset. If the first digit is a 2, it's a liability. And I kind of went through, extremely important when using a trial balance worksheet, because I would look at my trial balance, I would find every account that starts with the digit of 1, it's going to go into these fields. They're all going to go on the right-hand side here. I would go and type in, the corresponding amount I see into the trial balance into these particular fields. I would then go and look at all of my 2s. And I would go and start filling out my liabilities. Okay, so I would then go look for a 2, look at the title, match it up to what's occurring on the sheet here. And this is why I like to have a trial balance as opposed to financial statements. The numbering system and how everything is codexed and itemized. If you are working with a good trial balance, you're going to zip through a business return. You will just look at the number, you will look at the description, you will go and just type into these corresponding fields throughout. Now, as you input the data here, it's going to take this information and push it through ultimately to your balance sheet. Before, I did not have any items appearing here, but this is the whole beauty of the entire process, is that as we add in forms or as we add in, different sections of this tax return, it's constantly going to be referencing this trial balance worksheet. So as I add in different forms, different credits, etc., the majority of the data should be pulling from here. And we might have some non-financial data that maybe doesn't occur in the financial statements or the trial balance that we need to go and input. But once we fill this out and we fill this out properly, as financial information needs to push throughout this 1120 return, every form, every worksheet is always going to constantly be scanning this, referencing this, and pulling out the data that it needs from the trial balance worksheet. Now, when it comes to something like assets or liabilities, ultimately, this is a little bit less important to how much money the company made throughout the year. When it comes to what the income is going to be, what the expenses are going to be, that is going to be input down below. We're going to have an income section. We're going to have an expense section. Now, I have already gone and input some of this information into this particular tax return. But as you fill these out, this is going to flow through to a few different places. Number one, it is going to flow through to the first page of the tax return where we have our income section here. And as we scroll down, we have our deduction section. And equally important is getting this part right. Once we input it into the trial balance worksheet down below, each shareholder's ownership percentage is going to dictate how much of these items flow through into their K1. And this is really the most important part of the tax return, because even if we made a slight error and, filling out some of the non-financial data on the 1120S page 1, that is still contained really to this tax return. If we do not get this correct when it comes to the income, expenses, the assets, etc., the K1 is going to be wrong. And then when we fill out the 1040 tax return, they're going to be paying the incorrect amount of taxes. It's really the most important thing is to get this trial balance worksheet. However, it is a pretty straightforward process, right? Most of these are going to be listed out directly on the worksheet itself, but occasionally you may run into items and you're not quite sure where they need to go. Maybe they don't fit neat and tidy into one of these sections. If we scroll all the way down, there is a section here where we can go ahead and put in miscellaneous, put in an amount, you could have other, or you could go through and for anything that's missing from this list, just go and actually type in the description here and put in an amount. So there is a catch-all if you're ever not quite sure where something is supposed to go that you can use to fill this. Now, getting back to the trial balance, just so we can kind of visualize this one more time. With the trial balance, you will want to most likely have 2 monitors, and you will want to go ahead and put the trial balance on one screen, have your tax software running on the other, and then you're just plugging and playing as it appears. However, if you are not getting a trial balance, if you are not getting financial statements, you're getting the notes on a piece of paper, you're getting just like a big conglomerated bank statement for the year, you will kind of have to decipher and go through each one of those fields on the trial balance worksheet to figure out where it's going to go. This is why I honestly think about someone who's not going to consistently give me this sort of data. Is this someone that I really want to be taking the time to do their tax return? Because it is going to take not a little bit more time to complete the 1120S. It is going to take a significantly longer amount of time to prepare the tax return. But if I were to do this presentation and look at a 1040, I have to go and show the W-2 input. I have to go and show the Schedule C. I have to go and show the Schedule E. I have to go and show K1s. Like, there's so many things with the 1040 where with the business return, once you get comfortable with this input, you're going to be off and running. You will get through these returns, in my opinion, pretty proficiently once you've done a handful of them. And it's really not as daunting as, I first thought it was going to be. Once I did about 5 or 6, it's pretty straightforward. Like, the numbers may change on your trial balance or your financial statements, but generally the same flow is always going to be the same. Now, I think the next part to go to and have a quick polling question is just what is a trial balance? And I always seem to pick polling questions that I really continue to just beat the point to death, where I just go over and over and over and over again. So hopefully all of you will get this right as well. But what is a trial balance? It is a financial report that is prepared at the end of an accounting period and lists a business account balances and debit and credit columns to ensure they are equal, or it's another name for the Schedule K1. I'm going to give everybody maybe a minute or so to answer this. I'm thinking probably everyone's going to get this correct, but we will always see. It's okay if you don't. It's not, it's not a, not going to grade you here. It's not a big deal if you do miss it, but I'm going to take a quick sip of water and I will be right back. Okay, and it looks like we have the majority of people have answered this. So we will go ahead and click over to the results, and 100% right. It's ultimately the trial balance is going to help you make the K1, but it is not a K1. It is going to, be the financial report that we use to prepare the tax return. And speaking of K1s, if you've ever done a 1040, there's a pretty good chance you've seen a K1. customers will receive K-1s. Quite a few different entities create them. Most commonly, you will see this when you're preparing a 1065 or maybe an 1120S. It's definitely the most common area to prepare a K-1. And it should be noted that the K-1 between the 1120S and the 1065, they are slightly different as far as like how this financial information is arranged on the right-hand side. But generally speaking, they're pretty close, right? Now, if you prepared the 1040, you're mostly looking at the K1 and plugging in the information into a K1 input worksheet, whether you're using TaxWise, whether you're using a different tax software. Process is relatively similar between them. Now, if you are making the K1, really what becomes of the utmost importance is the left-hand section, right? We now have to make sure we're getting this right. Now, the first few areas, the EIN, the name of, I have a partnership K1 here, but it's pretty similar for the shareholder. This part's pretty easy, but where it can get complicated is down below. When we have the beginning and ending percentages, what is their share of each? So you have to think of this like, this is a pretty straightforward K1, where at the beginning of the year, they receive 40% of the profits. At the end of the year, the amount did not change. Beginning of the year, they had 40% of the losses. The end did not change. Now, that's an easy K1, right? These items are not changing. We don't really have to worry about that the ownership percentage changed. Did someone sell part of the business to someone else? Did they buy some of the business from someone else? Well, if that is occurring and, different people are putting in a different amount of money or they're directly purchasing shares from other people that, are shareholders from this company, it's going to change their ownership percentage. So, as a general rule, but if they just have a few people, it's kind of easy to track everything, right? It's kind of easy to say, okay, they bought this from here or sold this to them. But if you are getting into a larger S corporation return, this can be a really difficult thing to track. How does the ownership change throughout the year? I definitely recommend, if you are new to an 1120S, which is really the scope of this presentation, start off with very small 1120Ss to get used to these fields here with the ownership percentage. Because ultimately, when we're preparing the tax return or preparing the K1, it's going to look at the total amount of ordinary business income, for example. It's going to take 40% of all of these items and push it through to these fields. And if we're preparing the actual K1, let me go ahead and share my screen a second time here. Okay, the tax software is going to go and prepare this for us. Now, this particular 1120S, I just have one K1 in here to keep things simple. However, let's say there were a bunch of different shareholders. Let's just say, for hypothetically, there were 10 different shareholders. There needs to be 10 K1s that are going to be generated. If there were 20 shareholders, there has to be an equal amount of K1s that are going to be generated. Now, setting up the K1s is largely going to occur year one when you're first doing this tax return. This information will largely roll forward from one year to the next, so you're not going to have to completely recreate the process each and every year. However, we are going to have to check things like the shares each and every year. Items like this will not roll forward as they do change, and you will want to make sure that they are correct. So what I have for this K1 is, you can notice these items have a green underline, like the corporation's EIN, the corporation's name, the address, etc. This is all in green, meaning it's just kind of pulling from the 1120S page 1. But as we go through, we're really going to rely quite heavily on these red highlights. If you see there is a red highlight, there has to be some information within there. For example, if we look at box D here, corporation's total number of shares at the beginning of the year, and then below it, we have the total number of shares for the end of the year. S corporations have to have shares. They have to have shares, as that is what dictates how much of the corporation you own. If you are getting a K1, you have to have some sort of share. If you have 0 shares, you don't own the business, you don't need to be included in this. Maybe you were a prior owner. That would probably be the most common reason this would happen. But if they have 0 shares, they can be removed from this list. They are not a business owner. But one of the nice things about TaxWise is as you go and start to fill out these items, it'll remove the red underlines for you. So you should always have a pretty good handle of what are areas that have to be filled out. Now, as we continue to scroll down this K1, it moves away from the corporation information and it starts to focus in on the particular shareholder, right? So I've gone and input myself as an example, but I can tell based off the red underlines, I have to have a social security number input here. I have to have a address, and this will really be how you go through and get the non-financial data input into this return. As we continue to scroll down, we will come to this section. And earlier when we were looking at the K1, I was really talking about the ownership percentages might change throughout the year. This is the worksheet that we are going to use to figure out how those changes have occurred throughout the year. Typically, you will have an interest at the beginning period. This may roll forward from the prior year if you did the prior year tax return. And you will have the interest in the ending period. It'll look at the shares. It'll calculate what the ownership percentage is. How this works is with the ownership percentage. As you look at the 1120, and you get to some of these big fields like gross receipts, it will divvy up each shareholder's ownership percentage. It'll do the math. It'll take the total amount. It'll multiply it by their ownership percentage. That is what is going to generate on their K1. You can see here, ordinary business income is different from what it was on the 1120S. So it's going to flow from the 1120S. It's going to use this worksheet, and then it's going to flow into their actual K1. Now, I have this particular person set up to allocate 100%, right? But as we go and work through this, if you've ever filled out a K1, like on the 1040 side, you will notice this is all arranged in the same order. Like if you were to fill out the K1 worksheet, box 1 of the K1 is ordinary business income, right? Box 2 is net rental real estate. Now this numbering may be slightly different depending on if it's a for partnership or an 1120S. But ultimately, if we're the one preparing the K1, it's going to select what's applicable, right? From an 1120S tax return and it's getting K1s prepared for a shareholder, it will know the format and it will go and prepare this for us. As we continue to scroll down, if we get into our sublettering, we may need to input the sublettering here, or there will be a worksheet that we can use to go and fill out this section as well. That's why it has the green underlines. And really with this is going to be the most important section as far as what is going to flow through ultimately to the 1040. If you are new to doing an 1120S tax return, really the 3 things that you have to nail and you have to get them right is you have to get pages 1 through 5 correct. This is the informational section. We need to get our trial balance right, as that's what's going to fill out pretty much all of the financial data. And then we have to get the K1s right. Now, I'm not here saying that you can get the rest of the tax return wrong, but what I am saying is that if you fill out this section with the 1120S information right, you fill out the K1 like this section right, and you put in your trial balance correctly, the rest, you should have a pretty good degree of confidence that the financial data is going to push throughout the tax return correctly. And it should be a much less daunting process in order to prepare this tax return. Now, as you get into more complex S-Corps, there are different forms that could be added. There are different credits they may qualify for. What you need to know is if you're using a tax software like TaxWise, it's always going to be referencing back to those 3 places, the 1120, this K1, the trial balance. If these are right, as you add in additional forms into the tax return, it will just pick what it needs and it'll fill it out. Now, by and large, there still will have to be data input that's done, but generally speaking, it is largely non-financial data. If we need to input information about a square footage of an office, for example, or if they have some mixed use vehicles in their business, right? Maybe they're not 100% owned by the business. Like we'd have to figure out the miles, but it's largely non-financial data. It will always reference back to this trial balance worksheet, which is why I've spent so much time talking about it. So with that being said, we are coming up to the top of the hour. So I do want to stop sharing my screen and jump back into the PowerPoint. And looks like we have a couple more polling questions to go through. I do want to talk about what I use to prepare these presentations, as I think you could get some benefit out of it as well. And then lastly, we will briefly talk about a promo that we are running for anyone interested in switching to TaxWise, where you can get a pretty substantial discount on the software. So when I go ahead and advance this slide, we're going to go ahead and go to our last polling question in regards to the actual 1120S tax return. It's going to focus on the shareholder. A shareholder is an S corporation. A shareholder is an S corporation, will receive a Schedule K-1 reporting their ownership interest of the S corp income and losses. I don't like how I wrote that, so I'm going to re-summarize this. The shareholder is an owner of an S corporation that will receive a Schedule K-1 reporting their share of ownership interest in the income and losses. This one, I'm not expecting 100%. I really don't. It's not the best wording that I've done for one of these. However, we did talk about this quite a few times, so I wouldn't be surprised if everyone got this. And you can kind of see some of our inexperience with the new platforms. We have answer A, true and false. It's both at the same time. It's a contradiction all in one answer. And then option B, we have type your answer here. So this is a little jumped. So we're just going to go ahead and I'm going to let you know the answer is true. The shareholder is ultimately who owns the S corp. If you have a partnership, they're not a shareholder, they're a partner. That's really the biggest difference as far as the classification between the two. If you go really in depth in the weeds, it could become more and more different. But for tax preparation purposes, this is going to be right. And we'll go ahead, true and false. So we've both got it wrong and right all together at 100%. Let us go ahead then and talk about our next slide. TaxWise Desktop, TaxWise Online. I'm also going to just take one quick second to talk about Answer Connect. So with TaxWise, I showed off the online platform today. There is also a desktop platform. If you do not want to be online, you can run it directly from your device. I use TaxWise for all of these presentations. Generally speaking, it doesn't matter to me if you want to switch to TaxWise, which one you get between desktop and online. But what I will say is if you're not quite sure, always get TaxWise Online is you get desktop included for free at no additional cost. The opposite of this is not true. If you get desktop, you do not get online for free. So if you're not quite sure, always get online. Other thing, and the more important thing that I want to focus on with this slide is CCH Answer Connect. I have to make a lot of presentations throughout the year. I cannot remember each and every piece of code the IRS has gone and written that I have to use to prepare these presentations. I use CCH Answer Connect to prepare these. Now, CCH Answer Connect was not originally made so I could go and create presentations. What it was originally made and its primary purpose is to help you get through sections of a tax return where you are not quite sure how to get through those sections, specifically meaning this is a database of different articles that have been proctored and procured by CPAs, JDs, MBAs, and it is developed over the span of many, many years. I've personally been using it for 4 years, but I know that it's much older than 4 years old. And this is really my guide to get through complicated tax returns, where I can go and search any key thing into Answer Connect, and it'll bring up a few different things, honestly. If I type in the child care credit, I don't get just one article. I get a bunch of different articles. I get some topics, which are high-level overviews. I get some explanations, which are more in-depth examples, like the first example here, like specifically employer-provided child care credit. But I use these for the 1120S returns, the 1065 returns. I use this for my 1040s. If you feel like you're at a stage where you're bringing on business and you are not completely comfortable with some of the information that they are giving you to prepare the tax return, I cannot recommend this enough. I personally use this to prepare these presentations. Typically, when I get to a slide that lists out all the requirements for an S corporation, all of it came from Answer Connect. So I always do like to take just a minute or two to just kind of highlight that if you ever do want that second line of defense, you want to make sure that you're working through some of these items of the tax return correctly, whether it's a personal or business return. Would highly recommend taking a look into Answer Connect. It does sync up with TaxWise, so you can load this up directly from the tax software, or you can do what I've done here, just open it up in your web browser. It really doesn't matter. Okay, so with all of that being said, we're going to go to the next slide here. And just want to let you all know about a promo that is going on for TaxWise Online. As a part of these presentations, I do like to throw in a promo at the end. And if you are thinking about switching tax software specifically, this is a 25% promo. Unfortunately, this is only for new customers, so I can't help you if you're an existing customer. And I will be coming back to this slide as really the code down here at the bottom that says use promo code 25 end-to-end TW web. It's what you would input at the online store, but I'll come back to this in a second, as I do want to go and push to our next polling question. And it's just a polling question about TaxWise. Would you like to learn more about TaxWise? It could be the online version. It could be the desktop version. If you click yes here, we're going to have a rep reach out to you, and we can kind of discuss next steps. We can see if there's anything additional you need to see in the software. Maybe you need to see a 1040. We have resources that we can send to you in order to help you see the software. If you do need to see any of the other returns. If you don't want us to reach out to you, just click no. That's perfectly fine too. As we do host these for both as a plug for our TaxWise Online solution or TaxWise Desktop solution, but we also host them. Anyone can join. You don't have to be a TaxWise user, as we do like to have some resources throughout the year to kind of explain different sections of the tax return. Or if you're already a TaxWise user, just go ahead and let us know. Now, once this is done, I will go ahead and flip it back to the promo slide. If you do want to make a switch today, you can go ahead and use that promo code today. And while we're kind of looking at this last section, I have a question. It's not really 1128S specific. It looks like we have a TaxWise user that is using desktop, I'm assuming, and they're asking how to download the 1120S to TaxWise Online. There is an import function where you can move the returns from desktop to online. I would recommend calling support if you're having issues using it, if you're running into any problems or you're not quite sure where it's located. However, I do want to make it clear this is a one-way street. You can push a tax return from desktop to online. You do not push it from online to desktop. It goes in one direction. Okay, and so with all of that being said, I'm going to go ahead and leave it here for just a minute more, so hopefully we can get the rest of the people to answer this question. And then we will go and bump it back to the promo code. Looks like that was the only question that came in, so really nothing else to answer on my end. Okay, so we're going to go ahead and we will leave it at this screen. I do have a couple more minutes here, so I'm going to hang out for 2-3 more minutes before I end this presentation. If any other questions do come in, I will do my best to answer it and address it quickly. Okay, it looks like we have another question. I have a question, but I don't totally understand it. Can we use Shortcut on the online version as well as the desktop version? I don't think I know exactly what you mean by shortcut. If you could just type another question with a further explanation, it might help me answer it. Okay, and waiting on a further explanation of shortcut. I don't quite know. Maybe evaluation. If you want, there is an online, so there is a trial version, if that's what we're talking about here. For TaxWise Online, you could literally just Google it, and you can play around with the trial version of the software. If it comes to desktop, you may need to reach out to us. I'm not entirely sure if there's a desktop version, as that's something that has to be installed locally on a device. So I don't think there's a trial version or evaluation version for the desktop version. You might be able to call us, though. If you were to call us and talk to a sales rep, they might be able to get you one. But I know online, or I know TaxWise Online, you can just Google it right in the software. There's really nothing to download with TaxWise Online. So it should be, you'll just set up a username and a password and you'll be off and running from there. Okay, and so with all that being said, I think that's all the questions, and we are running it right at the top of the hour. I'm going to go ahead and end this presentation. Want to thank you all for taking some time out of your day in order to learn about TaxWise and really learn about the 1120S return. And we will be hosting another one of these in a little bit, probably about a month's time. I will also be co-hosting another presentation on the big beautiful bill and some of the changes that are going to be occurring because of it. So try to stay in the loop, and if those do interest you, feel free to go ahead and join those. And just want to thank you all for joining one more time, and enjoy the rest of your day.